The important thing here was understanding when not to trade. Oh my god, me looking at this price is giving me PTSD.
Welcome everyone to the Prop Challenge, the show where your favorite traders from the Forex, indices, futures and commodity markets come together to show you that they have what it takes to pass a prop firm challenge live right in front of you. You get to see all of the trades that they've taken live so that you can learn from their trading strategy and their methodologies. You also get to see exactly how they would execute in a live type of scenario. Now, I know what you're going to say, there is no hindsight trading. All trades are simulated through FX replay with live data taken from the last 2 years. A random month is chosen from the last 2 years by our random wheel chooser thingy device. Anyway, here are the rules. Our rules are based on the most popular prop firm parameters. They emulate similar targets and restrictions to your favorite prop firms. Traders must achieve an 8% gain given an unlimited time period to trade, much like most of these prop firms nowadays, starting from a random month, of course. However, they must adhere to strict rules of 4% max daily drawdown and an overall drawdown of 8%. So let's see if your favorite traders are really able to put their money where their mouths are and prove that they have what it takes to take on the prop challenge. So we've got Kimmel here on our the prop trading challenge, and essentially we have got him taking on the challenge to see if he can hit that 8% target within 4% max daily drawdown and 8% overall drawdown, pretty much like most prop firm challenges. You have unlimited time to hit those targets. I just wanted to find out more about the way you're going to trade so that we can, have everybody follow along with the way that you trade. So in terms of the pairs that you trade, what pair are you going to be trading?
So I'm only going to be trading euro dollar.
Okay.
And
then,
in terms of, yeah, go ahead.
And then the session and time frames that you're going to be trading as well?
So my main focus is going to be the daily time frame. So I want to be in line with my daily time frame bias. Then I'm also going to look at the 4 hour, 1 hour, 15 minute and 5 minute in order to get my entries on the 5 and direction on the other 3. So those are going to be the important time frames. The session is going to be London session and New York session, both of them.
Awesome. And then in terms of risking per trade, you're going to be risking, I'm assuming 1% per trade, as if you're taking like a prop challenge. Okay.
Yeah,
and
if I have unlimited trading days, then I am risking 1%.
Awesome. And then are you going to have a fixed TP, or is your TP based on structure, etc., etc.?
My TP is based on structure, and obviously if I'm close to target, then it's going to be based on percentage return.
Okay, cool. And then do you go break even? At what point do you go break even? Is it a set amount, or is it based on structure as well?
It's based on structure as well. So if there is a big pullback that would then invalidate my entry, I need to see 3 PD arrays being, and people that trade ICT would know. I need to see 3 at least order blocks, fair value gaps, or structural points for me to move to break even. So those 3 have to be invalidated for me to move to break even.
Okay, awesome, bro. So we are going to do the draw for the date that you start on. So it's going to be a random month date. And then you're going to take it from there. And then we're going to see how you do. And then essentially at the end, we're going to come back and have a look at your stats. And then we'll be able to compare them to everybody else who has done it. I don't think there will be any others that have done it except for maybe myself by this point. We can sort of compare at that point and see how the stats play off. Obviously, I mean, trading is very individual. So depending on the month you start, it depends on how quickly you're going to hit your targets, etc. So it's not about time. It's just the individual stats in terms of like risk reward, win rate, those kinds of things. Again, those are all trivial things, but it'll be cool to basically compare. So yeah, good luck, bro. I think it's going to be an interesting one. A lot of people ask me, what is my favorite prop firm to use? And the answer is simple. It's Blue Guardian. Blue Guardian has the best prop firm conditions of any prop firm I've used to trade with. And they allow you to take an unlimited amount of time to pass their evaluation. Not only this, but they give you the Guardian Protector, which is a tool that stops you from hitting your max daily loss. You can also set it further down to stop you from over trading for that day. It simply cuts off your MT4 account and you can't continue to trade if you hit more than that loss. If you want to use the prop firm that I use, click the link down below and use the code GARTRADES to get 10% off your purchase. Let's continue with the video.
Okay, so I have been assigned a backtesting session. This is like doing homework to me. Listen, I don't feel like doing it. I haven't backtested in a long ass time. But don't you dare say that this is an excuse to lose. No, I will not lose. I will not lose. So let's go. And my idea is that I want to reach 8% profit target. The way that I'm going to do it is being in line with the daily bias and trading the 15-minute. I normally trade the 5-minute, and I sometimes experience with other time frames too. But for the sake of this challenge, I'm going to stay on the 15-minute to explain that you can be highly profitable with any, like you can pass a challenge with any time frame. So on the weekly, we can see that there is order block right here, up close candle, so to say. That's what I normally refer it to. On the daily, and we also have the highs right there. So I'm looking for the highs to be tapped. We have a daily fair value gap that was really well respected. The only thing with this fair value gap is that there were a lot of lows being engineered right here. So this is a lot of liquidity that can be taken. I like the fact that these overlap. So these down close candles overlap with these up close candles and this weekly up close candle. So we will see. So the 2nd of January, if I am not mistaken, is actually not really a trading day. It's a bank holiday. So I'm going to let that pass. And we are going on to day number 3 of January. Okay, so this is 3rd of January. So now there are two things that I'm seeing. Either if the market wants to go for these highs short term, we are probably going to come here and move higher. So come to the down close candle and move higher. So we will see if there is a reaction from here, a bullish reaction from there. I'm going to be looking for longs, but I will want to see a nice market shift first. We have equal lows right there, but this is overnight. So let's go into the session. So this is where I trade. I'm looking for a move lower, move higher, and then entries long. Or this plummets. This has plummeted to these. So now we may have a retrace. So let's see if there is something like where we can enter something like this to target at least this fair value gap. So if price comes to here without giving me an entry, I'm not doing anything again. Okay, so this is what I'm looking for. Now, to play the buy on the daily, just to this fair value gap again. Because my idea is that this is a Judah swing to then still finish with a candle inside of this, inside of the fair value gap. So I'm looking for a retrace at least to here. That's going to be TP if there is a trade. Yeah, which is in line with that fair value gap. I like that. Which is in line with this fair value gap. Okay, so now we have order block, order block. So what I am going to do, I'll put an entry right there with the target is going to be this. So we kind of have to play here because I want to do at least. So let's do 20 pips, 21, and let's extend this just a little bit. Okay. Risk 1%. So let's go now. What I'm looking for, what I like to see in these type of situations is the candle starting bearish, a little bit bearish. This is where I go into a little bit of drawdown, and then the candle actually impulsing up. So starting bearish and then actually finishing bullish. Or just move from here, I guess. But yeah, like my limit to see how good this entry could be would be the 50% of this. I wouldn't want the candle to go much lower than that, which is this, right? This level right here. So let's see if we get to 1 to 2. Again, don't forget, how am I playing this? I'm playing the fact that we already have this extended move on the daily, and we are playing the fact that price wants to come back into this fair value gap to remain bullish to target these highs. So I would want to see a close inside the fair value gap to look for further longs tomorrow. This has to go quicker. Okay, so now I'm going to reduce this to here. This is 50% of the order block, and now you have 1, 2, and this fair value gap 3 PD arrays that have to be smashed through for my stop loss to get hit. Okay, so for example, this is if I had no risk on the table. I might even do that. Am I going to do this? What time is it? 12, 2. Okay. So let's do this. This is quite aggressive to be very honest with you. So 11.5 pips. This is 2.5. Again, and this is taking advantage of the possible power of 3 and down close candles. Like I genuinely, those are the things that I love. So let's see. Let's enter in a market order because it's already there. Oh, that's not what I wanted. I wanted to change this into the 1 minute. Now, I would only do this, as I said, if I were to remove risk. Now, the problem here with removing risk is that, for example, price can still come back into this fair value gap and react bullish. So that's one thing to keep in mind. That's one of the risks. So again, this is what I say with the power of 3 on each individual candle. We had this bearish move, finishes with a wick. Now this to me is quite good for the possible trade. Is that TP or no? Yes. Okay. Fuck, that was 4.5%. I was not expecting that. Okay. Let's see now, again, once again, we had the Judah swing, which was this bearish move right here. Now I'm looking for this to close here. I wouldn't want this to move lower by the end of the day. Okay, so that's day closes here. Okay, so this is where I would now be like, okay, if price is still to remain bullish, then I want to see a close above the fair value gap. Now, inside the fair value gap is not good enough. It has to be above it. Why? Because now we can just come back into the fair value gap, use it as resistance to move lower. So for example, right here, this would be another opportunity. But again, now the daily to me is not looking good, especially now that we've tapped the fair value gap. Yeah. Let's see if we get some bullishness from here. Okay. Okay. So I am going to enter right there. I don't really, it's not my favorite trade. Because now, it's not my favorite trade. Because this is PM session. And if the candle closes inside of the fair value gap, this to me is bearish. Yeah. There is the confluences. You do have the reaction of this down close candle. You have now the market shift. You have the tap of the down close candle right there and the fair value gap right here. So you have various things going for it. But again, I just don't like the daily. I just don't like the daily. What would I target even? Let me see. From this, what would I have targeted? Just to understand if it would have been TP. Like a 1 to 2, I would target these lows. So 1 to 2. Well, that would have been a loss. Let's... And by the way, like if I finish this month positive, like I can tell you that I finished personally in my personal account, I finished January at like -5. So it would have been an improvement. So let's go back to the daily. This is not looking, this to me now is neutral. Can we move up? Sure. Can we move down? Possibly. So this didn't sweep anything, but it can move up from here. Yeah. This comes to show, like, this is a lesson for you guys. This comes to show that sometimes not knowing when not to trade is as good of a position as trading profitably, because that's what you're doing. It's like, okay, you're not trading here. Like here, okay, did I say that there was an opportunity to take a long here? Sure, But did I take it? No. If I were to take this, then I probably would have taken this too, along there, whatever. Like, you know, it's all about knowing when not to trade. That's a really good skill to have. So Friday. We've just swept these lows. So, is there going to be a thank God it's Friday setup? Because now we have a huge bearish candle. Once again, what is the power of 3? The power of 3 is a candle that has a wick on both sides. And the only way that this happens is if the candle once was complete, like this, and then retraces, leaving the wick. So that's what, thank God it's Friday, TGIF, ICT setup is. So let's see, if there's momentum bullish, I may enter, maybe I enter bullish. Like here. Like if I was going to be very aggressive, I would just enter here, stop loss below here. But no, we will wait. This is why you wait. Okay, well, maybe not. But it's just 1 p.m. So, like this was a reversal on at 1 p.m. too. What is this? What's the risk to reward here? Fuck, 30 pips. That's a lot. No. Oh God, what was this? This was some news. I guess now you know what I mean with the retrace. Let's see if there's continuation. There was kind of a wick right there. No retrace? Are we going for the high? Yeah. So, just noticed. Now, I would have loved to see this wick here. Because then I would be so bullish now. Because now we're targeting the highs. Now that we have closed with the candle above the fair value gap. And the fair value gap is here. Okay, so that changes things a little bit. So I want to see it push down to go up. Like this. Which are the highs? Let me. So. Target. Target, and that overall. Have I missed the midnight open possible, Judah? Yes, I did. But I kind of hindsight, but okay, I wasn't focused. But that was clean. Judah swing, sweeps below these lows, market shift, order block, fair value gap. Gosh. God damn it, man. Oh my god, and now we've swept above the highs. Let's burn a little bit more and see how much it would have been. 16 pips. 1 to 2. Okay. That's fine. That's perfectly fine. Now, that fair value gap is kind of dismissed because it's a little bit further away. So now we're looking for a pullback to here, breaker, move up, order block, whatever. I just call them order blocks because everyone is going to go after me if I say that that's a breaker and it's actually like something completely different. So I just say order block. I save myself. Well, that's some shitty price. This didn't sweep the low. This didn't sweep anything. This was just sideways. Now we swept another high. Again, no sweeps before that happened. Like this, I wouldn't go for that. Are we going to go for that high? That's the last one. Equal highs right here. This is looking prime to go for those, for the highs. Okay. What was this? I don't know. Yeah, CPI. Is it CPI? Yes, it's CPI on a Thursday. God damn it, man. Okay, so I could be trading news here, but I don't really like. What I mean with trading news is trading after the news event, but it's not something that I personally recommend. Let's see the daily, and the weekly is also finishing. Okay. So let's see Friday finishing, which is this day. And again, thank God it's Friday setup basically. Equal lows right there. But this didn't sweep any clear highs. If this would have swept that high, this would have been a good setup. Right here, by the way, for people that are not familiar. This would have been a good setup if this would have swept those highs. But it didn't. Oh, what's this? Okay, so weekly finished. Weekly finished nicely. Next target is here. Okay, so weekly is bullish for me. The thing with the weekly being bullish is that the wick can come all the way to this low. Do I think that that's going to happen? No, because, well, maybe yes. Let's keep that on. So if you put this on red, yeah, it's possible that during this week we have a move down to here followed by the move up. But I don't really want to trade shorts unless the trend becomes clearly short. Then maybe I'll enter shorts. For example, if there's a 4 hour that closes below that. Either way, we'll see. Okay, now there are various ways to go about this. One, we enter longs or we enter shorts. What do I mean with this? Well, I mean that if we have a close below this, then I'm going to be looking for shorts. But this is a messy market. This is what I call a messy market. And by the way, I just noticed, look, this is CPI. And this is what happens before CPI. This is one of the reasons why I do not trade CPI. It's just a messy time. It's a messy time. So now we've swept the highs. Now I'm looking to see the order flow switch bearish if I want to take any bearish trades. Okay, we're actually seeing the opposite. I don't like this. I don't like this, but I like this. Is there an opportunity here? Once 1.4. Not even a 1 to 2. And see the difference here. As I was going for 15 minute candles, 15-minute candles instead of 1 minute candles. Now there's no more power of 3. This candle has closed. If I go 1 minute further, this candle is done. So I see the possibility of a long there, but there's not enough of a risk to reward there. Now, again, like if you're feeling FOMO, you can still enter like right here. Something here to target the highs. There's, again, probably still not a good enough risk to reward there. 14 pips. Yeah. Because I would want to target the high instead of targeting something else. And it would have been a loss, so. That's why, like, that's the thing. Was there a good probability that this would target the highs? Yes. But was there enough risk to reward? Because you need to understand that every time you're setting a trade, you're assuming risk. So if you are assuming certain risk, then you want to also have a certain reward before actually assuming the risk. So this is already PM, so let's go for tomorrow. So now I'm looking for shorts from here. Now you might be thinking, dude, this is moving down. Why are you not entering? It's because of time. I'm looking for London session, which is going to be 8. Now, some of you might say, oh, let's enter long. You are wrong. No, I like the fact that during Frankfurt, which is 7 to 8 a.m. where I live, we had the move up, because that to me is actually a Judah swing. And now we've tapped this. So if there is some bearish intentions now in the market, I'm going to enter. Huh. Fuck, I was wrong. Just kidding. There is no right or wrong. Or is there? Or is it? I need water. And the problem here, by the way, is that the 4 hour now closed heavily bullish. Heavily bullish. So we're now possibly going for that. God damn, man. Even if I was long, there was no real entries for me. Fuck, this is engineering some beautiful highs there. Like this is going to be tapped. Yeah. But there was no real entries for me because stop loss would have to be huge. Was there an optimal trade entry here? No. Now that we've swept these highs, I can't really wrap my head around entering on a long here, for example. You understand why? But yeah, this is some messy price. I think the only, like, these were actually not even the cleanest trades, but besides that, this was clean. This was a clean trade that I missed out. And I don't remember how much this was. I think I could have basically passed the challenge with this one. No, almost. Because now the market is just messy. But again, it's still in line with the possibility of a bearish week. What day are we in? Wednesday. So let's possibly still look for shorts. What do we have? I want to see a 4 hour close below this. Let me remove this. No, actually. Let's go back to here. Let's go back. 15-minute market shift and a bearish entry during my time. This is not during my time, not during my time. Okay. Now, bearish market shift. Dude, I'm going to stop talking about the 4 hour. No, but let's still keep this here. This is just some messy price, man. Look at this. Would you want to be trading this? Oh my god. Bearish market shift. So what would I be looking for if I was trading on this 1 hour fair value gap? It's this. Move back up to there. Here. Let's see. Which would basically align with this fair value gap. So basically entry, stop loss. And another loss. That's the, oh my god. This, oh my god. Dude, I think this is just becoming a back test to understand when not to trade. How not to trade. So this is on a Monday. So let's see if we have bearish push. And then it's a tap for those highs right there. Fucking hell. This is some messy price. It's not even providing Judah swings. We've just tapped the highs that I was looking for. No judo swings, nothing. This was just gap up. Damn. But hey, we'll look for the next one. Can we look for shorts now? I think we can, into this fair value gap. Let's see. I would want to position myself here just because this is a cutoff for me looking for shorts. Did this tap the 1 hour fair value gap? No. Yeah, this would be the cutoff. What time is this? 3. That's the cutoff for me. And this is why it's the cutoff. Again, are we going to talk about the fact that, again, this is kind of a, listen, this is when not to trade. Because now this almost turns into a neutral daily for me. Because there's still the weekly fair value gap right here. So I'm just going to be chilling. If this moves up, then it moves up from here. Yeah. I'm getting tired, man. It's fucking midnight over here. Let's see how much I missed out on. Hey, don't think like that. Don't think about missing out. So 1 to 2. Hey. It is what it is. There's going to be more. So that's news. Is that going to move up from here to the weekly fair value gap? And by the way, this is why you don't really want to trade against the trend. I told you this is the cutoff, right? Like, there was a possibility of a fair value gap right there, and there was a reaction, but that's the cutoff because of the daily. Like, that, I base my trading basically on the daily. It's, to me, the most important time frame. So you guys do whatever you want with that information, but it's definitely the time frame that I focus on the most. Because that's where price gravitates towards. This is on a Friday, and I don't like trading on Fridays. It's my worst performing day. It's a neutral week. I'm not entering here. Crazy stuff, crazy stuff, crazy stuff. Weekly, let's go back to it. So now, this week, I'm looking for the tap of that fair value gap. But I would want to see a Judah swing first. I guess this is going to be it. That's the Judah swing for a whole week? Really? What's the weekly looking like? Okay, on the weekly now we're having a bigger push down. Daily, what's the daily looking like? Okay. So let's see. Let's see what happens from here. I'm going to wait for 12 and I may execute. Was here. Okay. What am I missing? 8 minus 4.5, 3.5. 3.5 is right there. I don't like the fact that we just swept above these highs. But I like the rest. So we had the tap into the daily down close candles. This is what I like, to the extreme. This can also be the Judah swing for the week, and this is currently on Tuesday. So the rest of the week could finish bullish. So how would it be if I had this here? 3.5. No, I'll keep this like this. Let's see. I have this fair value gap that I would want to hold. This fair value gap and these down close candles. This is what I would want to hold. Okay, let's reduce this. Okay, if we see a pullback, if we see another pullback and a break above the high, that's going to break even. Now this is coming to here. I'm just going to hold this position. It's not my favorite thing to do. I don't really like holding positions. But let's see. Overnight, that's what I mean. So now we have these down close candles. That's what I would want to hold. Stop loss now is going to the 50% here. Okay, it's going to below this. So that is 0.5% risk. Yeah, 0.5% risk. 15. Okay, let's see if this is it. So I'm just holding this to those highs now. If I really think about it, there was a possible trade here with a stop loss below here. Below here. That would have been a trade. This is also a scale in. So you have one scale in right here. Boom. And you have another scale in right here. But I'm just not thinking about scalings anymore. I'm just looking to pass. Which would have been an extra 4%. So let's see. Ah, come on. That's it. We've done it. We've done it, everyone. Actually, again, oh my god. Me looking at this price is giving me PTSD of the 15 minutes that I've just been here. Because, like, it's a thing. Let's talk about this. The important thing here was understanding when not to trade. I was asked to show the stats at the end. But as you can see, like, price was so messy in January. This was actually finished January, beginning of February. This is when I took this trade. But I only took 3 trades, basically. I missed a couple of ones, and you saw how many I basically avoided entering because daily was simply not clear. That's the thing. Just wait for the daily to be clear and then trade from there. Like, the easiest trades are when the daily is clear, and that's personally what I focus on. So that's simply what I focus on. You saw that I was looking always on the weekly and on the daily for a target. And to me, that's the way to go. And think about power of 3, whatever it is. That's the things that I base myself on. But hey, that's videos for my channel. So make sure to subscribe to my channel and to this channel right here. Okay, so let's go into the stats. I don't know where the stats are. FX replay. Analytics. Average risk to reward 2.7. Max risk to reward 3.5. Ideal max risk to reward 1 to 10. Sure. Again, 100% win rate. That's not really the way that I do it. But again, let me tell you something. I think that the only reason I was being much more picky is because this is going on YouTube. So I was waiting for the best trades. Keep that in mind. But yeah, so these are the analytics. All the trades were on Tuesday. Interesting. And yeah, that's it. Hope you guys enjoyed. Make sure to subscribe to this channel and to my personal channel. And I will see you with the conclusion of this video. I don't know. See ya.